Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be asking Steve about some of the craziness lately in the stock market. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Steve, can you start off by telling us about the crazy move in the market yesterday and why it happened?
Hey, Allison, you bet. And thank you, everyone, for checking us out this morning. The intent is, we used to run a morning show for a little over a year, and the intent is that we continue to do that now, but in a little bit different format. So I'm excited to have Allison helping me out with that. And I'll go ahead and get to her question now. But eventually we will be live. We're not live today, but eventually we'll be live and we'll be covering material real time, so you can see it before the market opens on a daily basis. But here's what I want to show you to answer Allison's question. So yesterday, was an insane day in the market. I think it might have been historic, but I did not look up the exact things. But if you look on this chart already, this is TD Ameritrade Think Pipes. All the way to the right here, this is a chart of the S&P 500. So you can look at the stair step we've had up over the course of a year from left to right. Is how this is. And in the upper right-hand corner, we've kind of fallen off a cliff, right? So, we've had how many days out of the past, like 15 are in the red. And then yesterday we opened up down, kind of like we're just opening up down again today too. We're opening up down kind of big, and then the market just fell off a cliff. I mean, it did. We were over 1,000 points down in the Dow. And in the last part of the day, it started to climb all the way up to where we actually ended up in the green. So we made it all the way back. So there were a couple triggers yesterday. First of all, when you ever have a big sell-off like this, the correction point, which is when things end up at the 10% down from the all-time high. So in this case, that was an all-time high from 2.5, 3 weeks ago. That's when people start buying that dip aggressively as 10% down. So that was one trigger. Also yesterday, the selling was across the board. It was crazy. Everything was on sale. Normally in a diversified portfolio, you have, if one thing goes down, something else goes up. That's not what was happening yesterday. If you listen to CNBC or you take note of it on the web, they'll talk about decliners to, climbers to decliners, or winners and losers. Well, yesterday it was 9-1 down, meaning out of every 10 stocks that are in the universe, the stock universe, if you will, 9 of 10 were down. That means people are just selling, right? And when you get these big down days, that's just indiscriminate selling across the board. So that's another trigger. So the first trigger to start buying is that 10% down from all-time highs a few weeks ago. The next one is that 9-to-1 ratio. There's also some technical indicators, which I don't show very often, but I want to point them out on this chart here. The first one here is this is volume. You can see there was a lot more volume yesterday than there has been for the entire year, right? So, and that's this green bar right here, and pretty heavy volume yesterday. So lots of stocks trading hands. And then if you look down here, this is the RSI indicator, which I won't go into except for when it's below this red line. That's a clear buy signal for the market. So it's lower than it has been in the entire year. And then the bottom one is the MACD, which again, I won't get into that, but it's so heavily in the red, it's like 10 or 11 straight days down in the MACD. So that's what happened yesterday. We started selling off in the morning. We hit some of these triggers, and from there, the people started buying. So came all the way back to even. So it was pretty insane. So that's what happened in yesterday's market.
And for today, the stock market futures are already heavily in the red this morning ahead of the Federal Reserve's two-day meeting that starts later today. What can you tell us about that?
Well, today, you're right, not a good start. So we talked about yesterday and how we came all the way back, and you have to be thinking out there, if you have your own portfolio, is it over? Is this big dip we've seen here in the past 3 weeks? Are we finally safe? Is it time to put money back into play? And I would say that's a little too soon yet, because of this Federal Reserve meeting. So I switched screens on you here. This is CNBC.com. Nothing special here other than to just show you that the futures are in the red. The Dow down 300, the NASDAQ, which is again the tech heavy index, if you will, is down 2% already. I think the NASDAQ yesterday touched down 4%. So really, we're kind of where we were yesterday. Sure, there are some global concerns about Russia invading the Ukraine. Omicron is out there and we're dealing with it. But really, you're right in your question, Allison, is that the narrative that's really driving this market sell-off is the Federal Reserve and the potential for raising interest rates at the Federal Reserve meeting. Again, it starts today and it will be announced tomorrow for the actual announcement. So why are they raising rates? Well, they're raising rates to combat inflation, of course. But what really happens in the market is they started talking a few weeks ago about raising rates, and the market anticipates the anticipations of others. So again, sometimes things get baked in, and that's what the sell-off is about, in my opinion, is it has continually been continual selling since the Fed said that they're going to raise rates possibly up to 3 times this year. So will they, won't they? I don't know. My personal gut feel, my call in the situation is that they will not raise rates. But I think there's a potential they could. So if you're super aggressive, you could start buying back in now. I did some significant buying yesterday because I don't think they're going to raise rates. And again, if they don't raise rates tomorrow, market goes higher. If they do raise rates, it might already be baked in. So then it depends on what the Chairman Powell really says. But that's my take, and that's why I really don't think they're going to raise rates tomorrow.
Okay, last question. Anything you like today? Is it time to start buying this dip yet?
Well, kind of answered that question already inadvertently just by saying that I think there are some things out there. Anytime you face a sell-off that is fairly steep like this, when you think of the historic sell-offs, the Federal Reserve tried to raise rates back in 2015, which is a while ago, but some the investing world remembers that. 2015, they raised rates, I believe, 3 or 4 times. That was coming out of the global recession from 2007 through 2009. So again, the timing, they waited 6 years to start raising rates. Found out they really couldn't do it. The rate went back to zero. 2018, we had a big sell-off just from, again, raising rates a few times in December 2018. The market fell 19% in a month. Pretty aggressive sell-off. We had the big dip in COVID when we had the big sell-off in March of 2020 as the market went down 35% a month. So we're at that same point where we're facing that significant move down in the market. So what do you do there? Get out of speculative stuff unless you really want the risk. But you can buy quality names. So when I say quality names, again, it's not a particular endorsement because I don't know your financial situation, but you're really not wrong buying Apple or Amazon or Google or Microsoft or any of Home Depot, Target. Those sorts of names come to mind when it's time to start buying. Don't expect that you'll call the exact bottom, right? Nobody's perfect. You won't get the exact price out of the dip. But I think that now that we're significantly into the dip, that you can start nibbling on a few things. But for the most part, if you're conservative, then I would say just wait until you get a nice 3-day up pattern, knowing that we're out of this downturn.
Thank you, Steve, for your commentary and analysis. That's all we have for today's show. As a reminder, this was a financial education presentation. I'm Allison Ankerstar, and we'll see you back here tomorrow.
All right. Thanks, everyone.